Hey, everybody, it's Paul Olbrantz, Clear to Close Brokers. Happy Friday. You made it. The weekend starts now. I'm excited, and I hope you are too. Let's talk about interest rates. I think we're going to have a lot of great news for you, especially if you're out there looking to buy a home or even looking to refinance. The rates are heading in the right direction. So let's go ahead and bring up the average rates of the day. Just keep in mind, if you take a look at the email or in the subject line there or in the comments, well, our rates are a little bit better there. I always love to brag a little bit, but there we are. We're going in the right direction. Before we get to the actual update in interest rates, I want to share a really cool program. We're using it right now. It's called Homelight. Now, this is an alternative to a bridge loan. So if you're somebody out there that owns a current home and wants to buy another one, perhaps you can't qualify for both mortgages, or if you're like me and you have 5 kids, 3 dogs, a cat, and if you were able to get out of the house, you'd probably get more if it was empty and you didn't have to show the house with you actually living in it, and you get more for your value, more value for your home. This program is probably for you. Let me break this down. The differences between this program and a bridge loan, the major ones are: this program, you don't need to make monthly payments. So they will actually lend you at 0% interest a portion of your equity for the down payment on your next property, and you don't have to make a payment on the money that they give you. Now, there is a fee, of course, to use the loan, and it's based off the purchase price, or the sale price of your departing residence. But all in all, this is a great way to keep your monthly costs low. You don't have to pay the large bridge loan fees. This is a great program. If you have any questions on that, give me a call. I'm your guy. I would love to walk you through it. All right, let's talk a little bit about what happened this week. If you watch the news, there's been a lot of bad news about the market in terms of like builder sentiment and stuff like that. But I think once you dive down and really think about what's happening, you can see why home builder sentiment has come down. I think the major reason is when this report came out, there was a lot of unknowns of what was going to happen with the tariffs as it came to Canada. Because if you may or may not know, a large portion of our lumber comes from Canada that we use our houses. And so if that's going to be taxed, not only are the home builders dealing with higher interest rates than they would like to deal with, but now all of a sudden there's a potential that the lumber is going to increase. It makes sense that the home builder sentiment fell from 47 to 42. Now remember, anything below 50 is a negative feeling. So what we expect is that as time moves on, and we know what's going to happen, especially with Canada, that there's the home builder sentiment is going to come back. It's going to come back stronger, because here's the deal. We need homes. We need that sentiment up. We need them building homes so we don't have, so they can help us solve what our ultimate problem is, which is not interest rates, by the way. It's pure supply of homes. Speaking of homes, existing home sales came out. And if you take a look, month over month, it went down by 4.9%. Year over year, however, more homes sold, increase of 2% than it did this time last year. The median home price is $397,000. Now, keep in mind, just remember, that is not a valuation. That is not the appreciation. It does not measure appreciation. What that $397,000 means is that half the home price is sold above, the other half sold below, and in the middle is $397,000. Now, that's down month to month, but it's up year over year to 4.8%. Now, let's dive a little bit deeper into these numbers here, and let's see, quote unquote, how bad the existing home sales, report really was as it pertains to, especially the media, which, by the way, the more I follow the media, it seems like it's more about clickbait, selling advertisements, just trying to get you into their world based off of news that is horrible, but it's really not. Here, let me give you an example. So it's down 4.9% month over month. That's correct. At an annualized pace of 4.08. Now, they were expecting 4.1, not 4.08. So it came in a little bit lower than expectations, but not a dramatically huge difference. However, year over year, it's still up 2%. Now, this is very important too, because year over year increase for fourth straight month in a row. And so here's the thing, it's on the right path. Now, medium home price is at 369. We've talked about this, down month over month, year over year. But check this out. This is where the real thing is. Inventory is at 1.18 units. It's up 3.5% month over month. It's up 16%, which is huge. However, if you compare it to a normal market, we're still down 17%. So we don't have enough houses out there being sold to really, take on the demand of the people wanting to buy. 3.5 month supply. The normal market is 4.6. So it tells us that's still a seller's market. Remember, some sellers out there are being a little overzealous perhaps on what they want for their house. It's not realistic. Buyers, you are a lot smarter nowadays. You're not going to overpay for a house, but if you get a properly priced house, we are seeing 6-7 offers, and it's very competitive still. 41 days on the market, which is still up, which is up from 36 days at this same time last year. Let's really break it down. So 15% of the houses sold above listing price, which is up down 16% from last year. First-time home buyers took up 28%. Cash buyers, bye-bye, it's getting lower, 32% to 29%. Investors is still the same at 17%, which, by the way, 1 out of every 5 houses, give or take, is being bought by an investor, which tells me that it's still a great time to buy an investment property. If you're thinking about buying an investment property, reach out. Would love to connect. There's a QR code up there to set up an appointment. There's really 2 ways of looking at an investment property. You're either going to buy it for appreciation or for cash flow. Ideally, that's the unicorn where you get both, but you're going to have to choose, and I can help you make that decision, and I can tell you where perhaps you can start looking, or I have a tool, by the way, to help you look. Okay, what's going on next week? Case Shiller comes out on Tuesday, which, by the way, is an actual gauge of home appreciation. Wednesday, new home sales, mortgage apps. Thursday is GDP and pending home sales. And then Friday is going to be big. Personal consumption expenditures. That's the Fed's favorite measure of inflation, and this will move the market. So with that, if we're not working together, we should. There's a QR code. Click it. We do what's called a hopes and dreams conversation, where if you're not ready to buy or refinance yet, that's okay. Just click there. We'll put a plan in place together for you. Look, I've been doing this 20 years. I can definitely help you without taking an application, and put a plan in place for you and your family to help you save money. Look forward to meeting you. Paul Olbrantz, Clear to Close Brokers. And with that,